All right, today we're going to pull back the curtain on a financial strategy that the wealthy have been using for, well, forever to build incredible fortunes. It's an idea that kind of flips everything you've been taught about money on its head. And it all boils down to three little letters: OPM.
Look, we've all heard this a million times, right? It's drilled into our heads from day one. Stay out of debt, save every penny, don't even think about borrowing. For most of us, debt just feels like a four-letter word, a trap. But what if that's not the whole story? What if the very thing we're all taught to run away from is actually one of the most powerful wealth-building tools on the planet? See, the rich don't see debt as a burden. They see it as a lever. Let's dig into how they do it. So let's explore this completely different perspective on debt and see how it can totally change the financial game. It all kicks off with this one core idea, OPM, which, as you can see, stands for other people's money. Now, this isn't just about borrowing cash for a shopping spree. No, this is a strategy. It's about intentionally using capital from other people to get into investments and grow your wealth way faster than you ever could with just your own savings. You really have to think of debt as having two completely different personalities. On one side, you have debt as a burden, high interest credit cards you use to buy stuff that loses value the second you own it. That's the stuff we're warned about. But then there's the other side, debt as a tool. This is when you strategically borrow to buy assets that actually grow in value or produce an income. So how in the world do you actually use debt as a tool? Well, the engine that makes this whole OPM strategy roar is a little concept called leverage. Simply put, leverage is like a financial superpower. It lets you amplify your impact. Think about using a jack to lift a car. You apply a little bit of force and it lifts a 2-ton vehicle. It's the same idea in finance. Use a small amount of your own money to control a much larger and more valuable asset. The process is actually pretty straightforward. You start with what you've got, your own capital. Then you bring in the OPM, maybe from a bank loan. Suddenly, you're controlling a much bigger asset than you could have on your own. And here's the real magic. Because you control the whole thing, you get the returns on the full value of that asset. It absolutely magnifies the potential profit on your original investment. Okay, I know this can sound a bit like abstract financial theory, so let's bring it back down to earth with some real-world examples that you'll probably recognize right away. Two of the most common places to find OPM are probably things you've heard of your whole life: your good old-fashioned bank loans, and of course, strategic partnerships. A mortgage for a rental property is the perfect classic OPM play. Think about it. You might put down, say, 20% of your own cash, but you're using the bank's 80% to control 100% of an asset that generates income. The rent you collect helps pay down the loan, and any increase in the property's value is all yours. And this same idea scales all the way to the top. The super rich do this by borrowing against their huge stock portfolios at super low interest rates. It gives them cash to live on or reinvest, and they don't have to sell their assets and pay taxes. It's the exact same OPM principle, just with a lot more zeros. Partnerships are another really powerful way to use OPM. Let's say you've got a killer business idea but only have half the money you need to get it off the ground. So you bring in a partner who puts in the other half. Guess what? Their investment just became your OPM. It allows you to build a bigger, better, more ambitious project from the get-go, which boosts the potential payday for both of you. So we've covered a lot of ground here, from what OPM is to the power of leverage. But if there's one single thing you should walk away with from all of this, what is it? And this is it, right here. The big takeaway is not to just go out and fall in love with debt. Not at all. It's about a fundamental shift in how you see it. It's about learning the difference between bad debt that just buys you stuff and good debt that buys you assets. It's about understanding that debt doesn't have to be a trap. When you use it strategically, it can be an incredible tool to accelerate your financial growth. So I'll just leave you with this one final thought to chew on. Now that you get the basic idea of using other people's money to acquire assets, how does that change the way you look at a loan, an investment, or maybe even your entire financial future?